We have Nixo and Zach. And for those who don't know Zach, he's somewhat of a legend on Wall Street, particularly in the macro FX space, but also happens to be an Ethereum lover and now is head of research at Grayscale. And if you don't know Nixo, she does a lot of messy work behind the scenes on coordinating Ethereum upgrades now, but has been a long-standing and founded ETHStaker, which is a really important community for Ethereum and its decentralized validator site. So this is a treat, and it's be a fireside chat if you guys want to come on up.
Thanks, Drew. He really glazed us there. I'll take it.
All right, let's get going. I have some questions for you.
Now for something completely different.
So to start, I'll introduce my name is Nixo. I lead the protocol support team at the EF. We do a lot of governance things. It is messy, very different from what you do. So this will be an interesting dichotomy here. So let's start with. Can you give an intro on yourself and your background? I looked at your LinkedIn before this, and I loved the very first entry was the Lehman Brothers until 2008.
Yeah, until the bitter end. Yeah, happy to do that. I'm Zach. Thanks for having me. What could be better than Ethereum on the French Riviera? I mean, this is kind of amazing to be here. So awesome to be here with all of you. Yeah, so these days I oversee research at Grayscale. Grayscale is the world's largest crypto-dedicated asset manager. We're based in the US. Many of you probably already know Grayscale. But my life before this world was as a macroeconomist on Wall Street. I did start my career at Lehman Brothers and was there right until the bitter end. It was a lot of good lessons about how the financial system works and maybe some of the risks and vulnerabilities of centralized finance and the opacity that comes with that. And all these probably started me on the journey that got me here.
It makes a lot of sense you're in crypto now.
Yeah, I think so, yeah. But a long story short, I was basically doing what you could call global macro investing and strategy. So studying the U.S. economy and the world economy and translating those ideas into markets, currency markets, commodity markets, equity markets, bond markets, those sorts of things. And some point along that journey, I convinced myself that the crypto asset class, really starting with Bitcoin, but going quickly to Ethereum, the crypto asset class was the most interesting, the biggest, most important thing happening across all of those asset classes. And I just wanted to spend as much as my free time and as much as my own money on this topic, and then was very fortunate to find my way into Grayscale eventually.
So when did you make the decision to start working in blockchain? Was it before you actually started at Grayscale?
Well, yes, I think you could say that I was bothering everybody at I was working at Goldman Sachs at the time, and I was the guy that was bothering everybody that we needed to do more and more crypto. And I was able to do some things. I met Drew there as well, who is former Goldman also. And they let me get away with a little bit of crypto. We did a cool project with Coinmetrics and MSCI, for example, developing an index framework and taxonomy of digital assets while I was at Goldman. They let me do a little bit of research. And so I was kind of doing it on the side and looking for exactly the right thing. I had a 20-year career on Wall Street, and so I wasn't ready to just walk away and do anything. Had to find exactly the right thing, and was very fortunate to get connected with Grayscale, which is a leading fund manager, but really needed a research effort and an investment analysis effort. They didn't have a lot of that before, and so I was just very lucky that I was able to fill that role.
That's a good segue. Can you say more about your current role, what you're working on right now?
Yeah, exactly. So we do both internal and external things. So internally at Grayscale, we are doing research on lots of different blockchains. We say that we cover everything from Bitcoin to BitTensor and all the stuff in between. So looking at basically any relevant asset. I mean, there's 50 million crypto tokens. There are around 250 tokens that are sort of investable. They're listed on a real exchange, and they have some minimum liquidity and market cap. And so my team basically has a view on all of those tokens. We have a framework for understanding them, and we need to evaluate each of them for possible inclusion in Grayscale products. So say something like Hyperliquid. Is that something that should be a Grayscale product? Is it a long-run winner? How does it accrue value? What are its competitors? That sort of thing. So we do all that internal analysis, and then we do all the external-facing stuff. So I am the person at Grayscale that talks to investors, that does events, does media, writes all our external facing material. So kind of the external talking head for the business.
Man, I can't even keep up with one blockchain. I don't know how you keep up with all these different tokens.
Well, maybe it's like 1 inch deep, a mile wide sort of thing. And I have a lot of Sherpas that help me around Ethereum when needed.
Okay, so you started at Grayscale then in June of 2023.
That's right.
The price was approximately exactly where it is now. Are you still feeling good about your move into blockchain? Are you feeling motivated still?
I have never looked back. Honestly, yeah, I couldn't be more confident about it. There's a great Beeple NFT that shows Ethereum as a little turtle, chasing after 2,000 price. And so, yeah, it does feel like that sometimes, that we're just always at 2,000. But that's okay. Yeah, I get this question a lot, like, if Ethereum is so great, why isn't the price much higher than it is? And I think we forget, people that are so deep in the community. I mean, I think we need to remember that the thing that we are setting out to achieve, transforming the financial system, has not happened yet. We are still, the journey is still at its beginning stage, and a lot has been done, but, value will be created when we execute on the vision. And that's going to take another 10 and 20 years. And so it doesn't bother me at all that the price is just bouncing around at 2,000. Maybe those are, as a speculative trader, sometimes it's, I can trade those things over the short term. But in the bigger picture sense, we have a long way to go, and the price will follow, as we execute and achieve that vision.
So looking back before your blockchain time, what was the best call that you made at Goldman?
Best call at Goldman, probably the taper tantrum, I guess. So this is like a bond market thing. Back when the Federal Reserve was doing a quantitative easing, remember, it was sort of buying tons and tons of bonds and expanding its balance sheet and pushing interest rates down and down and down. And then, like oftentimes in markets, people extrapolate from past trends. And there was a view in 2013, many investors were saying the term QE infinity, quantitative easing infinity, meaning this was just going to continue and the Fed's balance sheet would get bigger and bigger. And you could kind of tell, listening to Ben Bernanke, that he was starting to get a little nervous about that idea, maybe thinking that we ought to rein it in, or there are limits to what we could do. And essentially the price wasn't reacting. And these are the best moments in markets, when the price is going one way and the fundamental information is going another way, and that's when you stick your neck out.
We're very familiar with that.
Yes, and a good example would be last year. I mean, I say maybe my second best call on markets may have been last year, when everyone was calling Ethereum dead, and there were a lot of people crashing out at 1,600, and yet the U.S. government was working on stablecoin legislation, and the stablecoins are on Ethereum. So how can that possibly be? So maybe that was my second best trade of all time, was Ethereum in 2025, to be honest.
Related to that, I'm curious how much you get investors like trying to pivot to other things and saying, what's the next big thing, and how often you have to push back and say, no, the building is happening on Ethereum.
Well, we talked to so many types of investors, so it's hard to be uniform about it. But maybe just to give you a sense, so yeah, we try to start people at the top. Focus on the big assets: Bitcoin, Ethereum. I'm probably saying this in the wrong room, but Solana, I think, also is in the mix among institutional capital. So some people are just interested in those largest assets. And then, of course, like, people always want, like, the trade, okay, well, Ethereum is great, but what's the latest and greatest thing, the 1,000x opportunity. So people ask about those things too, but we always go back to Ethereum as really the kind of cornerstone of crypto investing. And I think that message is very well received among institutions. Okay, so
Segue from that, can you tell us what is the current landscape? What's the current environment in your mind that you onboard investors into?
Yeah, well, at the moment, unfortunately, everything is clouded by military conflict. So things were kind of cooking in the economy until February 28th, which is when the military conflict began. And so it's just a question of when that is going to wind down or not. And we'll see. I don't want to be yet another voice giving a misinformed take on geopolitics, but that is really the situation. Assuming that we can get beyond this conflict, I think you have a healthy economy underneath. So prior to February 28th, the things that you were seeing in markets were kind of an endorsement that the world economy was in good shape. So things like industrial stocks, emerging market assets, industrial commodities, small cap equities. These are kind of things that are very closely tied to the underlying health of the economy. They were all doing pretty well. So my guess is what's going to happen here. I mean, again, maybe a misinformed take, but that regardless of the facts on the ground, Trump is going to declare victory and move on. And I think what we will get back to is a healthy underlying economy, which is probably a good setup for our assets. If I could carry on for 1 second, I mean, I think one big question is, what does this mean in a crypto context? I mean, people have a sort of 4-year cycle lens often when they're looking at Bitcoin and the rest of the crypto asset class. But I don't really believe that, I guess. I'm not sure I believe it. And we will see. I mean, if the U.S. economy is doing well, if oil prices are coming down, if risk-taking is coming back to capital markets in general, I think these assets could rebound relatively quickly. So what I'm doing with my own personal money is very aggressively buying over the last month, because I'm not sure that we will see valuations this compelling again in many of the key assets.
Okay. If you were not in crypto, so I listened to a podcast that you did a couple of years ago, and you were really bearish on the U.S. dollar generally. Is that still where you are? If you were not in crypto, would you be?
I'll be running around telling people to short the dollar, probably.
Oh my God. Okay, still in there.
Yeah, look, I mean, the U.S. dollar, just the basic facts are that the U.S. economy is only like 20% of the world economy, 15 to 20%, but the dollar is like 2/3 of global finance. So it has this enormously outsized share of global finance, and it maintains that share for lots of reasons, basically related to network effects, okay? It's convenient to use the dollar. But we are doing our best to undermine those network effects. And we do that by, for example, sanctioning countries. You know, Russia, Iran, those countries have 120 million people and they can't use the dollar. And then we also do things to anger our allies. You know, countries like Korea. You know, Korea has a lot of dollars because we have a military guarantee for Korea. If you kind of question those types of things, the geopolitical stance of the United States, you can undermine the role of the dollar. So, look, I think this is, again, like a long journey, just like public blockchain tech. It's not something that's going to unravel in just a few minutes. But I think no doubt that the dollar's international role is fraying at the edges, and I think it will be weakening on a trend basis over time. And you know, China is a huge part of that story. You know, if people that question this, I mean, think about Hong Kong. You know, Hong Kong is China's international financial center, and it has a peg to the U.S. dollar. The Hong Kong dollar is pegged to the U.S. dollar. How long can that last? I mean, maybe for a few more years, but not forever. It seems almost impossible to think that the Hong Kong dollar will maintain its role. So all of these things will change over time. And in my personal view, the main beneficiary will be some kind of alternative system. My bet is that it will be increasingly decentralized systems, cryptocurrencies themselves, and things like stablecoins on blockchains.
Do you think the stablecoins are going to stick to the U.S. dollar?
I think we need many more types of stablecoins, and it's sort of surprising that hasn't happened already. And I think some of the reason that it hasn't happened is just real dumb stuff, that like interest rates in Europe, Switzerland, Japan are low, so the economics of standing up a stablecoin are weaker. So if you get an environment where cash interest rates are a little higher, you'll have a greater economic incentive for a stablecoin issuer to stand up these products, pay all the legal and regulatory costs that it takes to stand it up. There will be demand for this stuff. It's just the economics are not great when interest rates are pretty low. So in a higher rate environment, you're going to see a lot more of these.
So all in on crypto right now. No secondary asset class that you would be looking into.
Well, of course, I dabble on other things, but yeah, more or less, I'm all in on crypto. Yeah, I mean, you know, I'm a family man and have kids going to college soon and all that kind of stuff. So I certainly have some, you know, side pocket dollars for those sorts of things. But yeah, I mean, I don't really see it seems like a waste of time for me often when I'm going to other asset classes. You know, to me, the return potential in crypto is so much better than I can find in anything else. I feel like I know my way around. Not to make dumb mistakes. And so, yeah, I tend to like basically all of the risk in my own assets is in crypto.
Did you make some dumb mistakes to learn those lessons?
Of course, that's how life works. Yeah, exactly. Exactly, yeah. Good judgment comes from experience, and experience comes from bad judgment. So, yes, I had all those all those 6 takes.
Would love to hear one if you want to share, but you don't have to.
Well, in terms of crypto, crypto things, Yeah, I mean, I've lost money on like rug pulls and things like that. When you're dabbling in low market cap on chain stuff, certainly have clicked links that I shouldn't have. Things like that. Those are some of the dumb mistakes. Yeah.
Yeah, I was here very early, and I learned a lot of centralized exchange lessons real early.
The biggest lessons are just the investing lessons that when everybody is in despair and is not sure whether it's ever going to come back and is unclear on whether what we're working on has any point at all, that's when you're supposed to aggressively buy those assets. And when everyone thinks it's a euphoria and we're changing the world and everything's perfect, that's when you give the assets back to the market.
I'm really good at that first part, not so good at the second part. Where do you think rates are going to end up at the end of this year?
I think they'd probably end up cutting a little bit. That is predicated on getting the oil price down and inflation settling down. But I think Kevin Warsh is probably a cutting central banker, not a knee-jerk, hawkish reaction. That's kind of where they were fairly recently. Kevin Warsh, other central bankers that are key to the decision-making process believe that there's a AI-driven productivity boom going on. We'll give them some room to cut rates. I think we get a little bit lower rates. But again, unfortunately, we are in the fog of war, literally here at the moment. So we need to get over the hump, oil price down. If you can get oil price down, then they'll be comfortable cutting rates again.
What I'm hearing is keep building until we figure out what's going on.
Maybe that's always the answer. Yeah, yeah.
Okay, so I am a potential investor. I would love to hear how you talk to me about Ethereum and how you talk to me about like why Ethereum.
Yeah. Let me answer that, and let me just say, like, we try to meet people where they are, okay? I think that's the most important thing when you're communicating in any kind of context of life, but certainly when you're pitching investment ideas, you have to kind of meet the person where they are, and there's so many different types of people. But I'll give you the spiel that I will give to a kind of classic institutional investor. And where they are is that they have heard about stablecoins and they have heard about tokenization, but they really don't know what that means. And so what we tell people is, stablecoins are an innovative piece of technology. Tokenization is changing the way capital markets work, and those things are Ethereum. And so that's how we talk about Ethereum. It's a platform for finance that has applications like stablecoins and tokenized assets, and to invest in that mega trend in finance, then you buy Ethereum. So that's that kind of story that we will tell the most average investor if they really have no concept of different types of crypto assets and they're not really sure how the technology works. They've definitely heard of stablecoins. They've heard Larry Fink talking about tokenization. They think they ought to be invested in this theme, but they're not even actually sure how to go about that. And what we need to tell them is these things are Ethereum. Ethereum is stablecoins, it's tokenization, it's decentralized finance. Just buy Ethereum to have that exposure in your portfolio.
Do you ever focus on like why the technology is cool?
Yeah, absolutely, yeah. And I do, and like stage presentations, I usually start with like a little song and dance about peer-to-peer digital money. So we say, if I want to give you $1, everyone in this room has heard this once before, but if I want to give you $1 bill, that's a peer-to-peer transaction with no intermediaries, no borders, no frictions, no cost. But if I want to give you a digital dollar, what do is I call up my bank and tell them to begin debiting my account, and it calls up your bank and begins the process of crediting your account. And over a settlement cycle that doesn't operate on nights and weekends and public holidays, eventually it shows up as a credit in your account. So our digital finance system works through credits and debits and intermediaries. And what we're talking about is a system where we can have the same value exchange like we have in physical bearer instruments like cash, but for digital assets. If I want to send you a digital dollar on the blockchain, I just send it to you like an email. So this is like, I'm saying it real quick, this is like the standard song and dance, but we usually start at that kind of level. And we don't have to go that much further. So things like EPBS and things like that, this is way too deep for most investors, but that's okay. You don't need to be a physicist to invest in gold. You don't need to be an Ethereum developer to invest in Ethereum. They just need to have the gist of it, understand the basic technology, peer-to-peer exchange of digital value, understand the use cases, things like stablecoins, and how it accrues value from those. Those are the kind of key points that you need to walk through investors, and if you get through that, then they're usually ready to allocate.
One question I'm particularly interested in because of what I do, and I'm curious if you receive this question in response to this pitch a lot, is Zach, if my bank is sending it to their bank and I know who has the asset, who controls that asset, who controls Ethereum? Do they ask you that? Are they interested enough or like thinking hard enough to ask those questions?
Yes, like by the second try, we start to get questions like that. What is a miner again, or how does this work? And it usually takes a few times. I sometimes say phrases like "it's a giant spreadsheet in the sky," kind of thing to walk through
It's a cloud spreadsheet.
I do cloud spreadsheet exactly. But yeah, people ask these questions, and look, not every investor is curious enough even to ask. They just say, okay, this guy thinks this is going up, I'll press buy. Other people, they need to ask dozens and dozens of questions, and they do care about how proof of stake works and all these additional details. So again, we just meet people where they are, answer whatever level of questions they need in order to invest. And they care about the technology, but I'll just carry on for a second. I think the other thing is like they care a lot about investment products as well. And I'm not here to shill ETFs or something, but that's part of the story as well. How do I get access to these assets in a way that I don't have to think so hard about custody, security, the execution price, the liquidity, how I do my taxes, how I do my estate planning. If I own something on chain and I die, does my spouse get the assets, blah, 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 all these kind of things. So the ETFs are like a easy button for them. So it's half about the technology and the investment case, and then half about how you get access to it in a way that aligns with how you typically deploy professional capital, right? So there's, young people can maybe throw a couple bucks and put it on Coinbase or on chain and not worry too much about, but an institutional investor has lots of diligence they have to do to make sure their assets are well looked after, and the ETFs are a good solve for that. So that's sort of the other half of the conversation.
So I assume that you are doing a bunch of research, making sure that what you are recommending to people is sound. So I would love to hear how you think about the economics of ETH the asset.
Yeah, good question. So at like a very simple level, we think about it as commodity investing. And commodities have value because they are scarce and they are useful at some, again, simple level, supply and demand. So that's how we think about it. Is something changing its scarcity or something changing its usefulness? And so, inflation rate is, maybe an increasing discussion. I would think of something that reduces the rate of inflation as something that increases scarcity and therefore increases value, as long as it's not in some way undermining usefulness, like security. Then it's something that would increase scarcity and therefore value. And then usefulness, that's all about the use case of the chain. Why you might need Ethereum, and we all know this stuff, but if you can increase activity on the chain through all the standard use cases like stablecoins, then you can increase the value of the asset. Now, what is the relationship between these numbers is a hard question, but I do think it is empirically possible to nail these things down better than people think. We have lots of blockchains, and I can compare across all those blockchains and see how much are they used. How many transactions and how many users and how many fees and the value of the TVL and all this sort of stuff. And we can compare across those blockchains and try to get a sense of what is the empirical relationship, the statistical relationship between usefulness and price. And so we do it in that kind of way. And that's exactly how commodity investing works in other asset classes. There is no discounted cash flow model for the price of copper. We think about how much supply will come online, how much usefulness will it have in, say, electric vehicles, and we try to make empirical judgments about what that means for price. That's how I approach L1 token investing. Now, there's other things that are cash flow assets in crypto, et cetera, but for ETH, that's how to think about it. Think about it like a commodity, and what can we do to increase its scarcity and increase its usefulness?
One of the so are you aware of the issuance change discussions that are happening?
Yes, the croissant and
yes.
all this stuff. Yeah,
there's the ultrasound croissant is my Twitter emojis. But I am curious how you feel. So one of the conversation points around changing issuance is people believe that changing Ethereum's issuance will cause disruption, and that if they're going to change issuance, they should do it all at once and do it only one time and commit to one issuance schedule for the rest of Ethereum. I have never really understood that argument because every other asset class ever has always changed its issuance schedule. Bitcoin was really the first thing where there was just one commitment to 21 million ETH or Bitcoin. So how would you recommend that the Ethereum community explore adjusting issuance?
Let me say not very much on this subject, because I think there's a lot of big brain people on this topic and that have more thoughtful takes than I do. I will say one thing about this, which is explaining Ethereum supply to anybody is difficult. Bitcoin, 21 million. Ethereum, well, it's kind of a close to 120 million, but it moves around based on the demand, and they're thinking about changing the issuance schedule. So does that mean it's scarce, or is it uncapped, or I get all these follow-up questions, and then you got to show people a chart, and then the chart kind of goes down, and then it goes up again, and people are very confused. So I don't really know what the answer is, but the Ethereum community could help me do my job by somehow making it simple so that it's easier to explain, because I kind of know how Ethereum supply works, but it's really confusing, especially when you compare it to Bitcoin. And 21 million coins, whatever, maybe it's a meme and maybe people don't like it, I don't know. But it's interesting to people and simple to people, they immediately get it. And Ethereum supply is hard to explain. Ethereum is scarce, like Bitcoin, but it's hard to message that. And so if we're monkeying around with the issuance, whatever you can do to help us tell a story about scarcity would be valuable.
Interesting. There is another question of economic security. Is that something that you look at when you are looking at any blockchain, what the total value locked is in what its economic security is?
Yes, I believe in that concept, and I don't think it's a meme.
Is there a number that you're looking for when you look at a blockchain? Is there a percentage?
You mean in like stake ratio or something?
Yes.
Not necessarily. I think of it in a kind of traditional 51% attack type of thing. If the number is in the many billions of dollars, it's probably not economically feasible. What exactly that number is, we don't really know, but only the smallest chains seem to have 51% type attacks. I don't think, and none of the proof-of-stake chains ever have this kind of thing. So I don't think we're near the threshold. It is a difficult question. We don't have evidence of, to go on to say that there's a magic number. Probably we are well in excess of that number for Ethereum. So I'm not particularly concerned about reducing inflation from the standpoint of economic security.
That's good to hear. All right, so. Okay, what is the key differentiation that Ethereum should be focusing on the near term and the long term? Feel free to point to, like, there are a lot of different stakeholders that in this ecosystem. App builders are building things, core devs are building things, researchers.
Let me say two things on this topic. Again, there's a lot of takes, and I'm here to listen as much as talk at events like this. But let me say two things. One is I think trust is really hard to come by. And I really believe that this is the big prize. If we can have a platform for finance that American users, that Chinese users, that Russian users can use, that is a miracle. And I think we kind of have that today. And the reason that we have that today is largely about open source. I was talking to a sovereign investor that was looking at Bitcoin and ETH for their portfolio recently. And we were talking about some of the OG whales in Bitcoin selling coins. And they said, well, does this mean that they know something that I don't? Don't I have to be concerned about that? And I can say to them with a straight face, no, it's open source software. They don't know anything that I don't know. And that gives huge confidence to institutional investors, because there isn't some hidden secret somewhere. So, crops or whatever we want to talk about. Look, what the acronym I think is pretty good, actually. but trust is very important. And I think trust is harder to come by than things like speed and scale. So my vote, to the extent I get one, is focus on that. Focus on something that can be trusted. And I think principles like open source are the most important piece. The other thing that I would say is, I wouldn't sweat short-term wins by other networks and communities, because I think we need to recognize that global financial markets are not totally ready for the Ethereum vision. Decentralized, global, peer-to-peer, smart contract platform finance. That's what we're building towards. It's not going to happen in an instant. There are institutions that have they want to defend their own position. They don't want to be disintermediated, and so maybe it's interesting for them to work with another type of network that allows them to control their domain to some degree. And we have a roadmap, straw map, and there's lots of interesting things happening in Ethereum community on privacy, for example. But I think it's fair to say there's some work to do. So I would say focus on the intermediate and longer term. It'll take a little time before the world is ready for Ethereum, but we can focus on building a trusted platform that is ready in a few years' time to onboard more users. You still have a little bit of time. So focus on the longer term, focused on trust. Those are, to me, the things that are most important, why I continue to go back to Ethereum despite many competitors now.
Participating in the governance process like I do, I'm curious, you said that the quality of being open source is important to you and important to investors. Is the governance process being open? Because it's live, all of those governance calls are live streamed, the decisions are very public. Is that an important part of the process?
I think so. It's harder to evaluate the particulars, but I'd say I think so. And I think the Bitcoin community, for its flaws, is pretty good about this stuff too. It's pretty easy for me to find people and to see what they're doing and to interact with that community, and that increases my trust that I know what is going on. And I think it's very important. When you think about sovereign investors, the world's nations don't all like each other, but they want to be able to use the same store of value asset or platform for finance. And the idea that they can verify all these things themselves. They don't have to take my word for it. They can go home to their home nation and go verify all of these things. That's extremely important for kind of building their confidence in the platform.
So crypto in general was born out of sort of a eschewing of the problems that you were very familiar with in 2008. Do you think that there's anything now that Ethereum could learn from TradFi?
That's a good question. Probably, I guess. I mean, what could Ethereum learn from TradFi? Ethereum should just do its own thing. I don't think you want Ethereum to become Lehman Brothers or something like that, or to become a Goldman Sachs. Focus on building a platform, and the users will come over time.
We can continue wearing the unicorn shirts, is what you're saying.
I love, yeah, of course, yeah. It shouldn't try to. Maybe I'll say this. On use cases and finding users and this sort of thing, like it's not really Ethereum's job, in my opinion, to do those things. It's to build a platform that is trusted, and it's not NVIDIA's job to go build the large language model. They're there to build amazing chips, and when the use case for those chips is ready, there will be a high price on those things, and that's how I think of Ethereum. Build a great product, and when the world is ready to onboard assets through tokenization, stablecoins, et cetera, there will be a lot of value in the most trusted platform.
Okay. In that vein, do you think that it is the Ethereum Foundation's job to onboard people onto the system, or what do you think the Ethereum Foundation could be doing better to drive narratives and maybe ETH valuation?
It's a really, I feel like people say a lot of things about the Ethereum Foundation. I don't want to contribute to that. It's not for me to say, what any one person ought to be doing. What I would say is, focus on the core principles of creating a trusted platform. As long as we're doing that, we're doing the right thing. Keep the story simple. And repeat yourself over and over. Repeat crops. If crops is the thing, just repeat it. You can never repeat yourself too many times because people aren't listening; they're busy. Repeat yourself over and over again, like a meditation mantra or something like that, and people will begin to kind of absorb that message. So, not really for me to say, but I would say build great stuff and repeat the message. That's enough. I will say one thing. I loved the Fusaka video. So that thing was great. Little things like this that help. Just occasionally break into mainstream and recognize that people don't read; they watch videos now. So I don't want to say anything further, but I loved the Fusaka video.
Awesome. Our media team will be very happy to hear that. We have a lightning round of questions now. Okay. How do you think AI impacts research?
Well, it's immediate access to deep information. I mean, you don't have to go find experts. It's kind of incredible, and we all know this. So it accelerates the research process. The downside is that it is a trust but verify kind of thing, because hallucination is a major problem. And so you can get someplace faster, but then you need to go check it all again, because you do get a lot of false answers. So I think we're still figuring that out. Some of the great data teams in crypto, like Allium, I think doing some interesting work on this type of topic, try to limit the degrees of freedom that the model is given so that you can increase the probability that you get accurate answers when you're working with quantitative information. So an amazing tool, but also the hallucination is a big problem, and I think that's what we're trying to solve for still.
What was the last book you read?
The last book I read was actually an awesome book on global currencies by this guy, Barry Eichengreen. He's sort of like the OG academic economist talking about the international role of the dollar. The book is called International Currencies from Crisis to Crypto. So I'm like, oh my God, Barry Eichengreen wrote a book about crypto. I pre-ordered it. There was almost no crypto in the book, even though it was on the title, which just tells you that crypto sells books, but academics maybe are not actually spending all that much time on it. But it had one actually super interesting tidbit that I would love to share. I posted this on Twitter also. So it's not much crypto, but he talks about this thing called M-Bridge. I don't know if people have heard about this, but this was a project that a bunch of nations were working on to try to use CBDCs in an international context. So a lot of countries are skeptical of stable coins. They're like, let's do CBDCs instead, but they need to be able to work across borders. So they set up this thing called M-Bridge, which was supposed to basically allow CBDCs to be used in cross-border contexts. But it turned out that this group couldn't decide how governance should work. And when Western countries learned that the Chinese were involved, it all fell apart, and the BIS dropped out, and the thing got disbanded. So this is a lesson here, and this is, to me, like the important thing. It's like we can pretend like some institution is going to solve this problem for us, but I think it is impossible, because trust cannot be like manufactured by an institution. It can only grow out organically from like something like open source development. So that is like my view on Ethereum. Is like it's kind of impossible to see another a competitor really achieve what Ethereum is trying to achieve, and certainly not something that comes from a nation state, because they don't trust each other. So anyway, that book didn't have much crypto, but it did have this like one interesting insight, I thought.
I love that. The whole reason I'm in Ethereum is because it started with decentralization rather than promised it. What is your most listened to music album?
Most listened to all time has to be something Bob Dylan. Probably the most recent, though, something fresher. I love this band called The Heavy Heavy. They're from Bristol. It's a rock band.
Okay,
Check it out.
Someone you have admired most. Someone you have admired most of your life.
I'm going to say Vitalik. I very much admire Vitalik.
Excellent. Advice for builders in crypto as they think about institutions.
Keep it simple from a messaging standpoint. People are very busy and confused about everything. Repeat yourself. Keep it simple.
Okay, here's the softball question. If you could hold any asset right now, what would it be?
Ethereum.
Mike, thank you. And that's a session. Maybe time for one question from the audience. Yes, York, of course. Love it.
Hi.
Hi.
So Ethereum is currently motoring towards a hard fork or change in 2027, where they want to have a way to force the inclusion of transactions. And that explicitly includes anything, including stuff on the SDN list. Are you nervous that TradFi will just run away from Ethereum at that point?
No, I'm not. And I think that censorship resistance is core to the trusted, the nature of a trusted platform as well. Because, think if you're again, like a Chinese user or a Russian user or an American user, you just have to be confident that your transaction goes through. So I think that people understand this. I think traditional finance understands this. And we can build applications on top of the base layer that enforce different types of censorship or privacy or whitelisting or whatever as needed. But in my view, things that provide for censorship resistance are a positive, and I don't think that is necessarily a problem for institutions.
Nice. Fantastic. And with that, appreciate
Thank
Zach and Nixo. It was a pleasure.
Thank you.